So he either is incompetent or he's crooked. I don't know what he is, but he doesn't do a very good job.
When you talk to members of Congress on both sides of the aisle, they understand this. They may have different rhetoric out in public, but you talk to them one-on-one, they understand how critical the Federal Reserve is, and they are going to push back. That's where I'm an optimist. I don't think they'll let this happen.
The former Philadelphia Fed President Patrick Harker speaking to Bloomberg as a growing chorus of global policy and financial leaders voiced their defense of Jay Powell and the independence of the U.S. central bank. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. The Fed in focus for investors too, as cooler U.S. inflation fueled bets on an extended interest rate pause, a weaker yen helping drive a record-breaking rally in Japanese stocks, while the 5-year JGB yield hits an all-time high. We'll get market insights from Eastspring Investments CIO Viz Nayar, who expects Asia to continue outperforming the U.S. in 2026. Also ahead, President Trump tells Iran's leaders to show humanity, promising protesters that help is coming, as activists say thousands have already been killed. With the U.S. considering its options, including possible military action, we'll assess the risks with consultant and former State Department official William Klein. Asian markets are posting modest gains off the back of a weak U.S. session. Japanese stocks extending their record-breaking run, fueled by a very weak yen on growing expectations of a snap election. The Japanese 5-year bond yield also touching its highest since debuting more than 25 years ago. That's as fiscal concerns deepen over Prime Minister Sanae Takaichi's spending plans if she secures a stronger mandate at the ballot box. We'll watch for the results of the 5-year bond auction later this hour. And markets are also digesting a soft U.S. inflation print overnight, reinforcing bets for the Fed to hold rates until mid-year as the labor market remains relatively firm. December core CPI rose 0.2% from November, slightly weaker than forecast. The latest CPI data comes as the U.S. Justice Department puts the Fed on notice. The revelation of a grand jury investigation into the central bank has prompted global peers to rally around Fed Chair Jerome Powell, saying they stand in full solidarity. New York Fed President John Williams also emphasized the importance of preserving central bank independence.
When there's attempts to unduly influence monetary policy decisions, when those are successful, those often lead to very unfortunate economic outcomes, including economic instability and high inflation.
For more, Bloomberg senior editor Derek Wallbank joins us from San Francisco. Derek, no doubt Jerome Powell has backing, from his counterparts at least.
He does. Yeah, and look, we've talked, you and I, a lot about what the moves that Trump is making, the scrutiny that he has put on the Federal Reserve and Jerome Powell. Now, I don't think that Donald Trump is particularly sitting up at night wondering what the head of the Reichsbank thinks about what he's doing with the Fed, but it is certainly unusual to see all of these central bankers on a big memo warning about independence, and I mean all over the world, from the RBA and RBNZ over to Europe and the ECB and the BOE and the Americas, the Bank of Canada, etc. So this is sort of a who's who of central bankers sticking up here for the idea of Fed independence and warning that we're going down a road from which no good comes. We've seen a little bit of blip in markets here, although that's mostly kind of resolved for now. I think there has been a lot of attention on whether or not there was going to be a sort of riding herd to defend Powell. We saw North Carolina Republican Tom Tillis, for example, threaten to hold up any of Trump's Fed nominees until this matter of a subpoena was resolved.
And Derek, speaking of who's who, let's bring in Jamie Dimon. He weighed in on the issue, and Trump came out to say that he is wrong in criticizing the DOJ.
Yeah, that's exactly right. Now, Trump had originally said that he had none to do with this issue of subpoena. And we just heard actually from Jeanine Pirro, the U.S. attorney who's overseeing this. She was speaking on Fox News in the last hour, and Pirro was saying that, look, nobody is above the law, that the idea that her probe represents some threat against Fed independence is wrong. It simply means, as I say, that no one is beyond the reach of the law, and she described her probe as simply normal and a thing that anyone would do. But obviously, the names that are involved in this make this quite exceptional, right? You can search back in your memory banks for a very long time and not come to see something like what we're dealing with here. So this is quite an unprecedented situation, certainly in modern memory in the United States, and it has any number of outflows here. I think, again, bearing in mind that at this moment, Donald Trump, who is trying to get interest rates lower as part of his affordability push, is still going through the process of finalize who he wants to replace Jerome Powell as the head of the Fed. And that's at the time that some people are saying they might not go forward with it as long as this campaign against Powell keeps going.
Derek, thank you. Bloomberg senior editor Derek Wallbank there for us. Well, joining us now is Viz Nayar, CIO at Eastspring Investments, which oversees about $286 billion in global assets. Viz, good to have you with us. I mean, Fed independence is key to investors, and some suggest that if this persists, you'll see an acceleration of Sell America.
I think that we should actually think of those two things separately. So firstly, the whole narrative around the independence of the Fed is long held, and it's very clearly articulated from investors, and we heard some of that earlier just now. When it comes to Sell America, I think the arguments are much more around the market itself, the fact that consensus is pretty stable around another year of solid performance, and really more an argument around whether this is now a crowded trade and whether people need to think about other forms of ways to diversify portfolios.
Surely the credibility of a central bank does play a part in whether you put your capital in a particular market.
Of course. Now that means you're going to, so starting with earnings, and we start thinking about the market itself. We're talking about the dollar, we're talking about the curve, and of course we saw a little bit of this last year. When I came here last year, you might remember that the only thing I could give for 2025 was the only certainty is uncertainty. As we look back, the markets have absorbed a lot of uncertainty. So I think that at the moment, again, the market is trying to absorb this uncertainty. It's a process that almost one can think of a negotiation where they get to where that Fed will land. I think we have some ideas of who we think he's likely to appoint, and there are some really conflicting views there. So I think for the markets as a whole, we need to try and go through that noise, and I think it's something that we are, the market participants are actually just going through at the moment.
Speaking of noise, is it just noise in the short term or a longer term phenomenon? We talk about uncertainties with a capital S. We're seeing that being reflected in the commodity space, precious metals in particular, gold, and speaking of commodities, silver currently rising above, $90 an ounce for the first time ever. That surely is a reflection of how people are on edge.
So I think that, again, in portfolios, there's a lot of investment in the US. Without doubt, we ourselves, we actually do want to allocate to gold simply because it's part of a fully diversified portfolio. In terms of what this journey brings, I think that 2025 taught us that you can have very high levels of uncertainty, but it's very important to try and see through what that path looks like. 10 years from now, if we look at 2025, you'd look at a market where returns were pretty generous and markets were broadly higher at the end of the year. So it's really strong for market participants. The consensus is very much around continued performance and some of the drivers like CapEx that we've seen last year. But what we're seeing perhaps is a little more allocations to things like gold and precious metals, because that gives some diversification to portfolios.
Speaking of uncertainties, the market's also awaiting the Supreme Court ruling on Trump's tariffs. How significant is that? Does it carry any weight?
So I think on the introduction you mentioned, from Eastspring's perspective, we think Asia could outperform again in 26, having outperformed in 2025. So from an investor perspective, certainly in this part of the world, we have all the noise last year and some of the kind of that macro overhang for Asian markets. Of course, there could be an unwind and there could be alternative mechanisms that he explores. Again, it goes under that uncertainty again as a heading. And I think that we as investors view that again as being not negative for where we are in Asia.
So you have viewed past that ruling from the Supreme Court. Is that how you're looking at it?
Correct. From an investor perspective, we have two dimensions. So I tend to think of asset correlation as being the key worry. So when we look at the last 2 or 3 years, there's been a concentration in markets, and it's also been a significant increase in correlation, which actually makes it much harder to try and build a diversified portfolio. So we're looking at that. You need to actually build protection into your portfolios, and I think that's one of the key things. So that's, rather than saying looking through, we understand that we now invest in a world of uncertainty and heightened macro risks, and therefore we need to be cognizant of that when we build portfolios.
How cognizant are you when it comes to divergence between the markets and the economy? We're seeing that in Korea. Mm-hmm. We're seeing that in China, where the markets are, testing new highs, especially in China.
So I think coming into 25, if I can give the full journey, Asian markets were relatively attractive in valuation terms. Perhaps US and developed markets were a little bit more expensive. Now I think we will no longer say markets are inexpensive. I think that they're between fully priced and expensive. So those movements that we see in stock markets, really a lot of that has been driven by earnings rather than just simple earnings multiples changes. So corporate earnings have had a very strong year. So as investors, we continue to focus on that, on the fundamentals, to allow us to try and go through that noise.
Okay, hang tight. Nayar from Eastspring Investments is sticking around. And up next, a closer look at China's trade surplus extending a record run as overseas shipments surprised with stronger growth at the end of last year. Keep it here with us. This is Bloomberg. China's trade surplus climbed to $1.2 trillion in 2025, extending a record run as overseas shipments surprised with stronger growth at the end of last year. Let's bring in Bloomberg economist David Chu. David, how do you interpret the resilience of Chinese exports in 2025? I know it's no surprise. We saw that for most of the year.
Yeah, when we go back to the beginning of the year, people were quite concerned about the foreign trade of China, especially when China was facing the trade war with the U.S. But now the figure tells us that China's exporting sector is quite resilient. Well, I think one of the reasons is that China has a very significant advantage in cost, and also China has take the good point in the high tech and also the new energy sector, such as if you look at the EV and the battery and the solar panel, these things had a very good rise, and according to the official data, all of these goods recorded 20 or even 40% year-on-year growth in December. So it tells us that China's production side is quite resilient, and China has significant advantages in both the tech and also the cost in facing the global competitors.
David, how much clarity do we have? What's the outlook for 2026 trade, especially on the back of concerns that Trump is imposing 20% tariffs on countries doing business with Iran?
Well, first of all, if we don't consider the Iran issue, we think that China's exporting sector is still resilient in 2026. That could be the fundamental side, but also we cannot ignore the potential risks in the trade sector. For example, the Iran issue and also the trading environment in the global market is getting more and more serious. So that I think that overall speaking, the resilience should extend to this year, but the downside risks also exist. But if we come to the Iran issue, based on the behavior of the Trump administration over the past several years, actually he claimed for the secondary tariffs for several times, but we didn't see any concrete actions from them so far. So that we think the Iran issue cannot be a very big disaster or a risk to China for now, but we need to observe it, monitor it closely.
You've got to watch the space. David, thank you. David Chu, Bloomberg economist there. And global investors are counting on China's markets and economy to rebound in a big way this year, ramping up bets on the nation's stocks as well as currency. Firms from Goldman Sachs to Bernstein, SocGen are turning bullish on stocks, pointing to compelling valuations, supportive government policy and strong earnings. And as Beijing has allowed the yuan to strengthen, market participants are now forecasting the currency to rally to a strong 6.25 per dollar. Let's get insights. Viz Nayar from Eastspring Investments is back with us. So some say we're seeing China exceptionalism, right? When you take a look at the turnover, we're seeing something like 3 trillion yuan, never seen before. What's your take on where China stands right now? How attractive is the market? How much momentum is there?
So again, as a journey, we think back to 2025, DeepSeek, a little bit of momentum in the AI sectors, and then we had a tremendous amount of noise. It was interesting listening to David just now. I think the narrative he used was, we have to pay attention to these risks, but we can see some positive news. So China's done well. It's outperformed. It's had positive returns for 2 years. What we've seen on the back of that is investors, both institutional and particularly domestic investors. This narrative of China being uninvestable has gone away. It's people are coming back to the market. I think that from a corporate perspective, we do think in Eastspring that Asia is not one big homogeneous block. So the narrative around China, of course, David mentioned solar and some of the new energy, and also particularly AI, of course. And we've seen tremendous action in those sectors. So North Asia, Korea, Japan, Taiwan, of course, very much around that AI story. And then, of course, the rest of the market, slightly different. So I think it's interesting for China as an investment thesis as part of a wider portfolio.
Do you see a broadening beyond AI, tech, biotech? Do you see different sectors catching up?
Of course. So I think it comes back to the domestic sector. So we had this little bit of news this week around inflation going positive. So I think there are some positive stories. But then certainly for foreign investors over the last 3-4 years, there's been a little bit of disappointment on policy support as well. The overhang from the property market hasn't gone away. They do need to do more around it. But I think that when we think of China, certainly at Eastspring, we don't think of it as one big market. It's not a beta play. It's very much around finding those stocks and sectors that you want to be exposed to. And in building a bigger portfolio, you might not be exposed to certain sectors in China, not yet anyway. So
China may outperform, and we know that investors are doubling down on the Chinese yuan. We know that this is an economy driven by exports. Right? I mean, a stronger currency, not great news for exporters. Correct. How might this play out? Correct. So, again, we were looking at the breakdown of GDP over the last year or so, and you can see it's tremendous. They've done really well surviving the tariff noise, and they've done really well on exports. Now, I think that the best thing, we think of the policies around currency support. China is a country that's probably done best in terms of dealing with that noise, and there's no question that they want 5% GDP growth, and they're going to take those actions they need to take to deliver that. By China? By China. Do you buy Japan?
we of course buy Japan. I think Japan has been the exceptional story. You mentioned earlier around, of course, the government's policies and some of the concerns around the borrowing that might be required. But we always want we want investors to focus on corporate earnings. It's been a story of earnings improvement, and corporate Japan is investing again. I think these are really key turning points, and we've seen that over the last few years in Japan.
How worried are you about the weakening currency? Some say there's no stopping this currency. It will weaken further from here.
Yeah, well, the central bank, of course, is in a different stage of the rate cut. We talk about the Fed and where Trump wants to take the Fed. Certainly, we can see that in Japan, it's a different stage of the cycle. I think that they will try and do something to protect the currency. However,
intervene?
I think they'll try and support the currency. At the moment, we're looking at a rate cycle which is likely to rise. So I think that's really a key point. It's in a different stage to certainly the US. So I think that's going to potentially support. But you're right, trade deficits, I think the US government views those trade deficits and views the currency rate as a tool to help them with their own strategic objectives.
Might the weakness in the currency, continued weakness in the currency, prompt the BOJ to raise rates earlier than it had planned?
I think not, because I think corporate Japan is also going to be quite a significant player in that. I think that there's also that fact that the government is looking at this stimulus to actually help the domestic economy. So I think there's quite a few agents in that. It's not a case of just simply acting early. We need to look at the data. And I may sound like I'm very, as an investor, you've got to look at the data. Data helps. If we can get hold of good data helps.
So how do you play Japan best?
So for us, we have looked at those. So I think when we talk about the currency, really the large caps are obviously much more exposed to that. So for us, we've been finding value in mid and smaller caps, and some things exposed to the domestic economy. There is much more positive news in that domestic economy. So our own fund managers are much more interested in those spaces to actually deliver value.
And of course, a laggard is actually India. We saw how India dropped for 6 days in a row, something we've not seen in a very long time. Yet, I think you are among those who say that you should be buying India. There's value to be had.
So it's a very complex narrative around it. So we were looking at the returns on markets last year. Of course, India was one of the laggards. But actually, compared to most Asian markets, US was also an underperformer relative to Korea's, Taiwan's, China's, etc. So in terms of India, it's very much more a domestic story. So, of course, it's not an AI story. And so I mentioned earlier, when we think of Asian markets...
But when will that actually translate to gains in the equity market?
Well, if you think of where you are in the US, in the interest rate cycle in India, they hiked early. The inflation in India is at a lifetime low for most people. The central bank is very clearly able to stimulate. And what drives Indian markets is far and away domestic flows. They have continued to support the market. They continue to be there, and therefore gives potential for foreign investors to achieve two objectives.
So turnaround mid-year, end of the year, when do you see a turnaround in the Indian markets?
The best thing to think about portfolios, India, for example, goes into a portfolio. So it's not a tactical play. So in a portfolio, it behaves very differently. So when some of the US and techs are underperforming, India has been an outperformer because of the nature of the market. So I think that it has its place in investors' portfolio alongside China and the rest of ASEAN.
Okay, Viz, thank you. Viz Nayar, CIO at Eastspring Investments. Coming up, I'll look at what options are on the table for the U.S. when it comes to Iran and how Trump's next move could impact relations with Beijing. FGS global consulting partner and former U.S. diplomat William Klein will be joining us live from the UBS Greater China Conference. Keep it here with us.
Iran says that it will retaliate in the instance of U.S. strikes against U.S. assets in the Middle East. What do you say to U.S. service members about why it's worth the risk to intervene in Iran?
Yeah, Iran said that the last time I blew them up with the nuclear capability, which they don't have any longer. So Iran said that the last time. They better behave.
President Trump there ramping up his rhetoric against Iran. Trump's latest pressure campaign includes new tariffs on all countries doing business with Iran, but that also risks derailing his trade truce with China, which is the world's top buyer of Iranian oil. For more, let's bring in Bloomberg executive editor covering Greater China, John Liu. John, this seems like it is yet another potential, point of contention between the two sides.
Absolutely, Haslinda. We just came off of this pretty landmark agreement between the two presidents when they met in South Korea at the end of last year. And so far, everything seems to have worked out. China's buying soybeans. America is allowing NVIDIA chips to come into China. America's held off on shipping sanctions, a few other sanctions. And so everything's looked like it's been fine. But now, with what's happening in Iran and this threat from President Trump of an additional 25% tariffs on anyone doing business with Iran, that does put that agreement from late last year, from October, at risk.
John, what's been the response from China? Have we heard anything?
Well, the Chinese so far have basically said they oppose unilateral actions by the United States when it comes to tariffs. That's a long-standing position. I do not expect Beijing to say too much right now because we still do not have the specific details of how these sanctions would be imposed, what countries would be targeted, and what sorts of business we're talking about, because Iran does business not only with China, but with India, with the Europeans, with lots of countries around the world. And so does this mean every country who does any sort of business with Iran will have a 25% tariff placed on all of their goods shipped to the United States? So there are a lot of questions that we still don't have the answers to, and I don't expect Beijing will be going out on a limb in terms of commentary until we get more clarity.
John Liu, thank you so much for that. Bloomberg executive editor covering Greater China. John Liu there. And of course, markets have been shrugging off the potential 25% tariffs. We've seen how Chinese markets have been going from strength to strength. Now let's get more on the geopolitical risks and head back to the UBS Greater China Conference in Shanghai. Our Chief North Asia correspondent Stephen Angle is there with our next guest.
Yeah, and we can pick up on that conversation about the added Trump tariffs on any country doing trade with Iran with our next guest, Bill Klein. He is FGS Global Consulting Partner, also former longtime senior U.S. diplomat, not only in Beijing, in Taiwan, and elsewhere around the world. You join us from Berlin here at the UBS GCC, of course. Let's talk about that issue with tariffs. There is a truce. It may be a tenuous truce between China and the United States on the trade front. Right now, the U.S. tariffs on Chinese goods is at about 30.8%. Does another 25% on top of that potentially derail that truce?
Well, first of all, thank you very much, Steve, for the opportunity to speak with you today. Absolutely. The big question is, after the president announced these tariffs on companies that do business with Iran, or on countries, the big question is, what does that mean for China? Yes. Does that mean an additional 25% over and beyond the tariffs that you just mentioned, or is that already subsumed under what the two what is currently being charged? Nobody knows, right? And that's a very big question because, as you mentioned, the two sides have a truce. I call it a truce. It's certainly not an armistice, and it is certainly, by any means of the extent of the imagination, a peace treaty, right? China believes that it received assurances from the United States in Busan that the United States would not raise further tariffs, and also that the United States would continue to provide export control licenses.
Well, I would imagine that adding 25% on to this would sort of derail not only the truce, but also Trump's planned visit to Beijing in April at some point, right? So could there likely be a carve-out and say, okay, we're not going to add the 25% on China? Because even Peter Navarro back in August, when there was talk about tariffs upwards of 50%, he says, hey, we don't actually want to hurt us too with these tariffs on the goods that we buy from China.
Right. Yeah, I think the United States does not have an interest in allowing the current situation with China to worsen, right? That was very, very clear in the run-up to Busan. The results of of the Busan summit, I think, confirmed that. So yes, the U.S. will have an interest in avoiding any actions that could derail the truce, and also, more importantly, derail President Trump's expected visit to China this.
At FGS Global, your job is to essentially navigate the geopolitical issues in the world for your multinational clients, right?
Yes.
So obviously, after Venezuela intervention, the talk about Greenland, now there's talk, some are saying Cuba, but also now this issue with Iran. How critical are these geopolitical landmines going to be for business doing cross-border deals?
They are very, very important, Steve, because what companies want is predictability. They want stability, right? Whatever governments do, they want it to be signaled, they want it to be explained, and they want to be able to plan based on what they do. The more of these types of geopolitical uncertainties that you have, the more surprises, as it were, that companies have to deal with, the more that impacts their ability to plan strategically, and then, of course, that also impacts the decisions they make, right? The direct impact of any specific geopolitical event or surprise really depends on the company's business models. Yeah? Sometimes these events have only minimal impact, if at all, on a company's strategic planning, and sometimes they go right to the heart of what the company is doing. So it really depends on the individual company.
Well, I would assume that the Iranian issue would cause a lot more friction globally, because that's something that China would take greater interest in, perhaps Venezuela. I know 90% of Iranian oil is purchased, their exports is purchased by China.
Yes.
So any kind of intervention militarily into Iran, or even like what they did with Venezuela, seizing of an oil tanker that perhaps is going to China. Again, I'm getting into hypotheticals, but that could potentially derail any kind of goodwill that has been garnered in Busan or elsewhere between China and the United States.
Absolutely, but there the question is, how does China prioritize its relative interests? Yeah, on the one hand, it needs stable and predictable relations with the United States. That is probably its most important foreign policy priority at the moment. And just how much does a U.S. action in Iran, however that transpires, just how important is that for China relative to this overarching need to stabilize and the relationship? So I think that's very much an open question. My sense is that conceivable types of U.S. actions towards Iran would have a limited impact on China's calculus in this matter.
How do you think China is looking at the Venezuela situation? They've been fairly quiet, but others, and we covered it a few minutes ago on the show, have suggested, and I'm not necessarily in that camp, but because it's a far more complicated equation and calculus, and that is Xi Jinping's eyes on Taiwan. Are they looking at what the United States did in Venezuela as a blueprint, or more as a display of American capabilities?
Well, I think the response that we've seen from China just reflects that the fact that China's options with respect to Venezuela and what the United States there has done are frankly very, very limited. I would not agree that the U.S. action in Venezuela in any significant manner has influences whatever calculations the Chinese leadership may have with respect to Taiwan. What they are doing, Steve, is studying very, very carefully the U.S. military action. They are studying as much as they can discern the U.S. military capabilities, the U.S. decision-making process. They want to learn from all of that because, of course, how the United States positions itself with respect to Taiwan and the capabilities that the United States can bring to bear in Taiwan are very, very relevant for China's thinking about the future of Taiwan.
A lot can happen between now and April when President Trump is expected to go. Yes. At least he's invited to go to Beijing. But what do you think will be the most pressing issue? Because, again, the truce on the trade front is supposed to last until December.
Yes.
But there are geopolitical issues in the region, obviously. There's a continued support by Beijing, indirect or direct, of the war in Ukraine by Russia. Also, the increased feud between Japan and China over Takaichi-san's comments on Taiwan. What do you think will be at front and center of each other's priorities for that summit in Beijing?
Well, the most important priority for both sides will be solidifying the truce, in the trade and export control war, if we can call it that, right? So that will be first and foremost. I would expect that each side will try to get additional concessions from the other side on these issues of tariffs and export controls and the like. I also expect that they will be looking for some sort of symbolic symbols of improved cooperation on the commercial front. So deals in both directions will be signed. With respect to the geopolitical issues, I can certainly expect that even though the United States has been somewhat cautious in commenting about the current tensions between Japan and China, that the president behind closed doors will deliver a far tougher message to Xi Jinping about Japan and reaffirm the United States commitments to Japan and its defense. So I think that will be probably the most important geopolitical message that the two sides will raise. If nothing else in the geopolitical sphere happens between now and the summit itself.
So I saw a post from Joe Nye. He is the Asia Pacific head at McKinsey. He's talking about the rapid redrawing of the trade map. Different countries looking at how to navigate what has been an upheaval in trade since Liberation Day and the tariffs. Closest allies like Canada, Mark Carney, the Prime Minister, will be in Beijing today. Other countries, Keir Starmer of the UK is coming to China. We had Friedrich Merz of Germany coming to China. We had Albanese of Australia coming to China. Macron coming to China. How is China also navigating this, and what are other capitals around the world, allies of the United States, how are they looking at redrawing that trade map, given the friction that has arisen with many of these trading partners with the Trump administration?
Yeah. Well, first of all, we've seen that companies globally have already adapted, and they've adapted pretty swiftly. We see that trade flows have adjusted pretty remarkably. U.S.-China trade on the one hand has dropped, but then we see tremendous growth in trade in other regions of the world, be it Southeast Asia, be it Mexico, etc. Right. So what this shows us is that the world is not really decoupling, but rather globalization and these deep interdependencies that we have in the global economy are being rewired. Now, to answer your question about what governments are doing about this, yes, governments, like companies, are realizing that they have to diversify their trade relationships, that excessive dependency on any single market in today's world, governed by geopolitics, makes themselves vulnerable to geopolitical leverage on the part of their trading partners. So countries everywhere are thinking about diversification. So we are going to see, and we're already seeing this, government efforts to facilitate the development of new trade relationships, of new trading blocs and things of this nature. The Europeans just signed last week, after 25 years of negotiation, a trade deal with 4 Latin American companies. Europeans are talking about joining the CTTP here in Asia, and you're going to see more of these conversations.
They've agreed to a minimum price mechanism for EVs to be imported into the European Union as well from China.
Exactly.
So
exactly.
There are these things that are going on.
Exactly.
Obviously. What has surprised you the most as a longtime diplomat about how China, dare I say, stood up to the Trump administration and the threats of tariffs and did not back down necessarily in the early going? And it shows you sort of the resilience and the confidence that Beijing has.
Yes. So, throughout all of my years working with China, it was very, very clear to me that China still perceived itself as the weaker partner in the U.S.-China relationship. But what I also experienced in all of those years, Steve, is that China's self-confidence in engaging the United States grew steadily over the time as its comprehensive national power grew. So I did experience that, by 2016, 2017, we could no longer exert the leverage and get what we wanted from the Chinese, where they may have compromised on maybe 7-8 years earlier. Right. So this trend has continued in a pretty linear fashion, as it were. I think the decision late last year, to pick a fight with the Americans, right, and to deploy the export control weapon, I think that shows a significant acceleration of China's self-confidence, right? And
they found a powerful lever.
Absolutely.
In rare earths, rare earth magnets, and the like, and they're employing that on Japan right now too.
Absolutely. Every signal we're getting from China, officially, but also what I'm hearing behind closed doors, is that China is very, very determined to expand and to modernize these export control capabilities. So I think trading partners everywhere have to be prepared to navigate a broader and more sophisticated Chinese export control regime moving forward.
Bill, so lovely talking to you. We could go on and on.
My pleasure,
I don't know
Steve.
how our paths have not crossed until now and today. So let's stay in touch and have more conversations like this. Haslinda, I could go on and on. Can I take the rest of the show with Bill? But I'll hand it back to you.
I'm afraid not. Maybe next time. It was a great conversation. Stephen Angle, speaking with William Klein, consulting partner at FGS Global. Of course, we've been keeping an eye on that 5-year JGB auction demand coming in weaker than the 12-month average. Of course, this underscores pretty much the political risk in the country on the back of plans for the Prime Minister to call a snap election. Bids accepted at the lowest price at 0.4826%. The bid cover ratio was 3.08 versus a 12-month average of 3.54. Again, coming in weaker than a 12-month average. Take note that prior to this auction, the 5-year yield had jumped to its highest since its debut back in the year 2000. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Here are some stories we're following. Japanese Prime Minister Sanae Takaichi says she's seeking closer economic security ties with South Korea as she seeks to contain a diplomatic dispute with China. Speaking after meeting President Lee Jae-myung in Nara, Takaichi said they also discussed supply chain cooperation without elaborating. Lee says he emphasized the need for common ground between Korea, Japan, and China. South Korean prosecutors are seeking the death penalty for former President Yoon Suk-yeol over his botched 2024 declaration of martial law. A verdict is expected next month, with Yoon facing the prospect of either a death sentence or life in prison. Yoon was indicted last year on charges of insurrection after he shocked the nation and the world by briefly suspending civilian rule. Prosecutors in Taiwan are stepping up efforts to block China's tech players from recruiting the island's talent. They've issued an arrest warrant for Peter Lau, the CEO of Chinese smartphone company OnePlus, and indicted 2 Taiwanese citizens who worked for him. OnePlus is suspected of illegally recruiting more than 70 engineers in Taiwan. And the Trump administration has eased export rules for NVIDIA's H200 AI chips to China. The U.S. Commerce Department says it will now review applications case by case, although companies must follow requirements, including certifying no shortage of the chips in the U.S. Exporters must also limit shipments to China to 50% of U.S. production and follow strict customer checks. And India's been trading for about 7 minutes now. Its lackluster performance at the start of the year continues. The Sensex still slightly in negative territory. It has been missing out on that AI-driven rally in tech. Foreign outflows, by the way, in January alone has exceeded something like $800 million. And India's small and mid-cap stocks have underperformed their larger peers for more than a year, but some fund managers are now betting on a reversal on signs of stronger earnings momentum. Let's get to Mumbai and our Asia equities editor, Chiranjeevi Chakraborty. CJ, what's the thinking behind the change, I guess, in perspective?
Well, Haslinda, to put it very simply, is just faster growth. At this point of time, analysts are expecting that mid-cap and small-cap companies can grow at north of 10% or 15%, even in some cases, in terms of earnings growth when it's concerned to the third quarter of this fiscal year, compared to their larger peers who are expected to only grow by, on average, about 7% on an annualized basis. So at this point of time, market is really devoid of options where growth is really strong. And wherever they can find it, and which seems to be the mid and small cap space at this point of time, they are looking to allocate money towards those pockets of the market.
But some are expressing concern when it comes to risks, sluggish earnings, geopolitics. Might those factors drag down, those stocks as well?
Yeah, the risks are many. I mean, valuation is also another concern. If you look at the mid-cap or small-cap indexes, they're still trading above their historical averages. So valuations, while they have softened quite a bit from the peaks that we saw back in 2024, they're still quite elevated. But the argument that a lot of fund managers and some of the sell-side analysts are making is that they are now in a territory which is comfortable given the growth that they are projecting as far as earnings are concerned. And let's not forget, smaller companies tend to benefit more from the domestic economy, and therefore they are also an insulation trade to the Trump tariffs that India is facing.
We've talked about how foreign investors have been making exit, and those outflows amount to, $800 million so far in January alone. Might this attract foreign investors to come back, dip their toes, play the Indian market again?
That could be the case, yes. I think earnings growth remains the most crucial factor right now to attract foreign investors, given the fact that India is lacking when it comes to the very hot AI trade that we are seeing in North Asia and as well as the US. So as far as foreign investors are concerned, a sort of stable rupee as well as a return of earnings growth could be the two catalysts that might bring them back, and maybe small and mid-cap space are the space where they may look to enter first.
CJ, thank you. Bloomberg Asia Equities Editor Chiranjeevi Chakraborty. Still ahead, hear why JPMorgan sees deals momentum continuing this year after a roller coaster 2025. The head of APAC M&A, Rohit Chatterji, will be joining us in just a few minutes to share their outlook. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside. Well, Asian markets edging higher today with Japan a standout as the weaker yen fuels a record rally in the nation's stocks. Take a look where we are in terms of Nikkei 225. Currently up by about 1.7%, a new record high. We're also seeing huge gains in China, currently up by about 1% on the back of that stronger than anticipated trade data, emphasizing the resilience in China's manufacturing versus, of course, the weakness in its consumption at home. We're seeing gains also for the Kospi, currently up by 0.3%. Now let's get more on the big moves, especially in Japan, and bring in Garfield Reynolds, who leads our Markets Live Asia coverage. Also joining us is Bloomberg Forex and Rates strategist David Finnerty. Gav, let's start with you and start with the 5-year JGB auction. Demand was lower than the 12-month average. Not surprising. It does highlight the risk, I guess, in the political scene in the country.
Yeah, very much so. And in particular, the 5-year has been a somewhat more stable area over recent months when a lot of the pain has been focused on the longer end of the curve. However, that pain at the long end got so severe that they decided to reduce the sales of 30 and 40-year notes and actually look to boost potentially 2 and 5-year sales. So now they're playing whack-a-mole, as it were, in that you've got some weakness showing up in the 5-year auction. It wasn't so bad that it's likely to set off a severe meltdown in the bond space. However, it emphasizes that the path is significantly higher for Japanese yields. That's with the 5-year earlier today already hitting the highest on record for that tenor. So Japan's bond markets are going to continue to sell off, and that also, higher yields sometimes tend to mean stronger currencies. But in this case, that vote of no confidence in the fiscal outlook for Japan helps to drive the yen weaker as well.
That's right. Speaking of yen weakness, there's no stopping it. There's no floor because traders seem to think that the sell-off will continue as well, David.
There's certainly bets going on that it will continue. I think the question is over the the speed of, shall we say, its weakness. I think, certainly the Ministry of Finance has warned several times. Traders are aware of that. They like to test the Ministry of Finance, shall we say. And if it's a gradual decline, then I think that's one thing. If the pace picks up, which it has a bit lately, you think about a week ago, 155, 156, now 159. So if you saw that pace continues, then I think the threats of intervention definitely pick up. Having said that, I think the Ministry of Finance should be very aware that we are nearing territories that has intervened beforehand. If you don't intervene at those levels, then basically the market goes, okay, well, that's a green light to continue to push until you do intervene. So I think we'll be looking for basically not necessarily intervention initially, but I'd say a shot across the bow, the old rate call or something like that, the MRF meeting with the BOJ, some signal like, hey, we are now really close to intervention. I think that will more likely happen first.
There are limits to intervention. I mean, it depends on how deep your pockets are. That's always been the case. What is the level? Because right now, even though we're talking about yen weakness, it is not yet the level for intervention. What could be that level?
Well, the level, of course, is decided basically by, I think, by the speed and the level at which the Ministry of Finance, and that varies. You think go back a few years, 152 was something like that, then it went to 155, then it went to 160.
Is it the level or is it the pace?
I think it's a bit of both. I think the pace is definitely key. There's no question. If it's a grind, then I think you can go, okay, we can get away with that. If it's a quicker pace, then I think definitely you go, we've got to stop this free fall. Because, again, if you don't, you're giving traders a green light to go, well, let's just keep pushing it. And the markets are huge. Any intervention to date has had a limited impact. You go back historically, I think the last intervention was a few years ago. Yes, the yen rallied, but then, of course, over following weeks, it started to decline again. So it's a limited time. At the end of the day, it's the fundamentals that come. So if you're a yen, is the BOJ going to hike more? You're already looking for nearly 2 hikes this year. Unlikely given the history. And also, they want to be in line with what the government is saying. And the government is looking for stimulus. So they don't want the BOJ to hike too much. So then you go to the dollar side of the equation. For dollars showing signs of growth, the employment rate stabled. So you're looking what could change that side of the equation. The Supreme Court decision today, maybe that is, if they go against Trump and say that these tariffs are illegal, then you expect to see a dollar come under pressure. But again, that could be short term, because Trump could just say, look, I'm going to impose them under another way. But you may need the dollar to help dollar yen, for help the BOJ and MRF more than the yen side.
Golf, a sell-off in JGBs, a sell-off in the yen. How do you think the BOJ is thinking about it and its path forward?
Well, I think at the moment the BOJ is being a little bit sidelined by the focus on politics. It's already been notably pushed towards a more gradual pace of hiking by what's been going on politically, and a great marker for how the BOJ regards.
And of course, David, the question is, how should, I guess, traders be playing the yen? What are you hearing from the market so far?
So at the moment, certainly you look at the option space, I think it was quite interesting yesterday. There was a lot of demand, well, not huge demand, but decent demand for dollar yen call options, which are basically dollar yen bets, dollar yen goes higher. There are a lot of them with barriers, which basically, when you're doing something like what's called a reverse knockout, it's basically you're looking for dollar yen to move higher, but at a gradual pace. So those are the popular sorts of bets. But having said that, there are certainly traders who are buying downside protection or speculating on downside, so they're buying dollar yen puts. And again, logic being they're going, look, we are near intervention territory, so even if I'm long dollar yen in cash, let me hedge that bet in the option position. Or even you may say, look, it's at a level now, if I want to take a speculative trade, then maybe a short term, 1 week to 1 month sort of trade of a downside put option's been appealing. So you're actually seeing both sides of the curve traded, a bit more towards the upside, but again, even the upside, no one's expecting it to suddenly be a rapid dollar yen appreciation, more of a grind.
We're talking about a currency that has been seen as a haven play for a very long time. It's now acting like an emerging market currency. How are traders thinking about, haven plays? Is it now the yuan instead?
I think it's still, look, I think to some degree, the yen will always have a haven play. Remember, at the moment, we're really on a risk-on market overall. Equities are running quite well. So I think with all the money, remember, Japan, what often happens is they have lots of money stashed abroad with all the companies. So when risk comes to the forefront, that money does tend to go home. So there's always going to be some element of yen being a safe haven play. Obviously, the Swiss franc's another classic one. But at the moment, so with risk on, the idea of haven plays isn't really what the market's thinking. It's just looking for what can I attack, and the yen looks like an easy culprit.
And Garth, what's the path forward for JGBs?
Well, the path forward for JGBs is look out for the next trigger that sends them significantly lower. And for both JGBs and the yen, one of the risks is that what we've had so far is sell the rumor when it comes to the election, and you're actually going to get sell the fact. In particular, if you have even just polling showing it, or you have the actual vote held, and Takaichi does get an increased majority, a stronger mandate to pursue the sort of policies that she said she wants to pursue, which involve greater fiscal spending, greater stimulus, but leaning against the BOJ. All of that could mean significantly higher yields and a significantly higher dollar-yen rate.
Garfield Reynolds, who leads our MLive coverage in Asia, and Bloomberg FX and rate strategist David Finnerty. Thank you. Up next, JPMorgan explains why they're optimistic about sustained M&A activity in 2026. Their Asia-Pac deals chief, Rohit Chatterji, will be joining us just ahead. This is Bloomberg. Welcome back. You're watching Insight. Turning now to the deal-making outlook in the Asia-Pacific region for 2026, UBS says the biggest risk remains the regulatory landscape. We spoke exclusively to their regional M&A co-head at the bank's Greater China Conference in Shanghai.
The valuation of the overall market, for example, the Asian market, the Hong Kong market, they have been going quite strong. So it's easier to pack it to a higher benchmark index than before. And also the interest rate environment, especially for some of these larger cap transactions, the lending environment now is more constructive in doing something together. That's why you will see some of these deals, what I would actually call old deals, but they will be coming to conclusion this year.
What are the biggest risks to any kind of projections going forward?
The biggest risk remains around regulatory, especially some of the transactions in the market, they were originated out of regulatory needs. Maybe it's a foreign business that was acquired that needed to be carved out. However, if it's originated out of regulatory needs, it could be going through lots and lots of volatility throughout the due process. For example, whenever there is a change of regulation, or maybe there's a change of a political stance, then those transactions, the regulatory approval process could become very lengthy. And at the same time, because there is a bit of, I would say, over-optimism in the market now, driven largely by the stock market performances. But when there is an adjustment in the stock markets, some of the optimism may go away. And so that affects CEO and principals' confidence in doing outbound M&A.
Well, you mentioned Japan. There was a record amount of M&A in Japan in 2025. Is that trend going to continue?
Absolutely. There's still a large number of Japan-listed companies, and Japan itself, right? They are more welcoming to foreign investment. Even private equity firms attempt to. So that will continue. And at the same time, Japan continues to be a hunting ground for activist hedge funds.
Very quickly, what is your crystal ball for the Greater China M&A volume? Is it going to be 39% again?
It will not be 39%. However, I'm still very optimistic it will grow another 20%. Now, this is actually a very interesting trend, because if we look at the last two record years, one being in 2021, right after COVID, and 2015, the height of China outbound, the year after that actually went down by about 20%. But however, in this case, I actually would expect it continue to go up by another 20%.
UBS Global Banking APAC and M&A co-head Samson Low speaking to our very own Stephen Angle in Shanghai. Well, JPMorgan, meanwhile, says Asia-Pac deal-making is expected to remain strong in 2026, driven by solid fundamentals, sector momentum, and a shift towards scale and strategic focus. Joining us now for more on the annual outlook is head of APAC and M&A, Rohit Chatterji. Rohit, good to have you with us. So we've seen this deal-making fervor in the Asia-Pac region, and that momentum is set to continue in 2026.
Yes, we believe so.
Why?
Because the vectors that drove it in 25 still appear to be enduring going into 26. If you think about the key three drivers, activism, we saw 100 public activist campaigns in Japan and Korea last year. That is opening into this year with just as much fervor and momentum. So I think that given the focus activists have on trying to seek an event-driven outcome, that bodes well for M&A. The second, the drive for scale and creating and extending your footprint in new geographies. Asia acquirers bought $140 billion of assets in North America last year and $60 billion in Europe. Again, that, just looking at the discussions we are having with clients, is again a pipeline that continues to remain very strong through the course of this year, at least at the start. And then thirdly, the sponsors, which took a number of companies private, are also very motivated to review their portfolios for seek exits. Now, at a global level, there's like $3.5 trillion worth of assets held by sponsors, of which 25% are more than 4 years old, and they need to be exited.
But even as we talk about a hot M&A, environment in Asia, it was still hotter in the U.S. U.S. were about 50%, we're about 30 plus 40. Can Asia do better than the U.S. this year?
Well, it's a little difficult to project exactly what the levels of growth would be in the U.S. versus Asia in terms of percentages. But I think both markets are starting poised for very strong continuing deal momentum.
And Japan will be, leading the pack.
Well, Japan's now 30% of APAC business overall. Last year, it grew by 90%. India, 40%. India 50%, China 40%, and Korea 30%. Those markets still remain very strong. And Japan saw 125% growth in outbound volumes. That, I think, just looking at our own pipeline of business, should continue to remain very strong.
And what kind of pipeline? Because I think last year we saw something like $250 billion worth of deals in Japan alone.
Yes. And Japan's active for a number of reasons. Firstly, the acquirers from Japan in healthcare, industrials, tech, looking at footprints and financial institutions specifically as well, looking at extending the footprint in Europe, in the US, and in case of financial institutions also in India, which we saw a lot of activity in last year, that remains unchanged. Domestically, with 85 public activist campaigns last year, and you can imagine that for 85 public campaigns, there would be a number of situations that are still privately constructed, where they're seeking private engagement. I think those are good themes to play out. And sponsors are looking at putting more money into Japan. It's been a good market for them. And I think for the funds that are being raised for Asia Pacific this year, a significant proportion are still being earmarked for activity in Japan.
There are concerns in the Japanese markets because when you take a look at how JGBs are performing, we've seen a massive sell-off. The yen has been sold off as well. Concerns around fiscal spending and the political situation in the country. How is it that the M&A space is undeterred, untouched by all these concerns?
So for the domestic activity, the sponsor, which is led to some extent by sponsors and to also some extent by Japanese acquirers taking out their own publicly listed subsidiaries. Because the market is focused on domestic revenues and is funding itself in domestic currency, it's not as sensitive to where the yen trades now in the short term. And for outbounds, again, their focus being on buying US dollar or European assets, if they're funding themselves in those currencies, they're again not that sensitive to short-term movements in exchange rates.
Geopolitics, will that play a part? If Trump decides to take action against countries in this part of the world, would they be less attractive for M&A deals?
So if you assume that deglobalization is here to stay, then you have another impetus for M&A, which is cross-border acquisitions in markets that are core to you and where you either were exporting and you now need a manufacturing footprint of your own, or in extending yourself in markets where you think that activity will continue to grow. So that is partly the driver of significant volumes we see in M&A. Now, it's in healthcare, it's in industrials, it's in financial institutions.
And apart from Japan, we know that Australia was also an attractive space for M&As last year. How does it look for 2026?
So Australia is focused on specific sectors where we are seeing a lot of inbound deal activity, particularly in resources and in industrials. Domestically, there is still some consolidation to go, particularly in companies in sectors like gold, where the sector backdrop is supportive of those kind of consolidations. But it is more concentrated in those specific sectors and not very broad-based as such.
Are there certain themes or certain sectors that will drive M&A more than the others? I mean, we've been talking a lot about AI. Does AI play a part in driving activity in M&A?
It does. So if you just break down the volume from last year in APAC, 30% were the industrials, 20% was media, technology, and telecom, and 17% was financial institutions. Now, a large chunk of that 20%, which is TMT, was focused on digital infrastructure, data centers, towers, etc. And as the AI boom continues, the growth required in data centers just to support AI use cases, we're projecting it at 3.5 times the current capacity, which means that a lot of the money will continue to flow into the data centers in this part of the world, and there will be sponsor monetizations as well.
Which markets in particular, when it comes to M&As in AI? Which countries in Asia?
So if you look at where the data center footprint is, it's meaningfully built out in Southeast Asia. There's, of course, a big footprint in China. And the regional players are building out portfolios in Japan, Australia, India, and Korea as well. So as the Western hyperscalers look for greater capacity in these markets, the suppliers here, many of which are sponsor-owned and infrastructure fund-backed, are building the capacity in those markets, and at some point either they'll need capital for growth or seek monetization of their investments.
And earlier we heard your counterpart in UBS talking about China, expectations of growth there in terms of M&A. He was asked if we'll see 39% growth. He says no, likely to be 20. What's your own take on it?
I think percentages are hard to call, but I think confidence is coming back. We are seeing it through the course of take privates that we did in Hong Kong last year. And a number of those conversations are continuing into this year. If sponsors are willing to put more money into their own companies to take them private, or if there are greater players that they are getting confidence around backing in domestic China, logistics, healthcare, consumer services, etc., then that is an inflection point you watch for what may come after that. And I think there will be some more change of control events that will get probably executed this year that had struggled over the last 2 years.
What's the biggest risk in putting your money in China?
I think it continues to be the very intensely competitive domestic market. Right? I mean, it is intensely competitive. So there is in some sectors, there's still lack of visibility to what profitability over the next couple of years could look like, just given the capacity in the domestic market. And then it also depends on whether the investments are in sectors that are either geopolitically sensitive or are dependent on exports, because both those set of variables could move around.
Have you been, I guess, encouraged by what we've seen so far in terms of the fundamentals? You take a look at trade today coming in better than anticipated. For December, we're seeing policies and policymakers making the right noises, the support that's coming through as well. Is that the right reflection in terms of where China is headed? How much clarity is China providing right now?
So from an M&A standpoint, we are seeing the market become more supportive. The ability for banks to extend longer duration loans for domestic sponsor buyouts is a positive, particularly if you expect that activity would be driven through buyouts from sponsors of sovereign wealth funds. It's a positive. And I think the regulatory backdrop for domestic consolidation has also improved. So overall for our business, that's a supportive backdrop.
And India?
India too. Now, India seems slightly different. The very strong capital markets are providing an exit alternative for sponsors relative to just a trade sale. That has been a really defining element of of the business for investment banks for the last 12 months or so, which again I think will continue into this year. So in India, you're now getting, the sponsors are getting more confident paying up on values because there is at least a credible alternative through the capital market for the exit. And the other factor is the inherent organic growth that companies are seeing in that market, the relatively low free float in many companies given the long, big promoter ownerships, and I'd say the very strong corporate valuations, they all help drive M&A.
Rohit, you talk about how the pipeline looks really healthy. How is it looking for mega deals, and where will we see those mega deals?
So globally, there was a big resurgence in mega deals. 71 deals globally over $10 billion in size, and that was like more than twice the number before. Asia has got fewer of those, and you see them concentrated around Japan, Australia, and really those two big markets. So I don't think we'll see necessarily a very large number of mega deals, but we will see a fair share of those, particularly on outbounds from Japan and inbounds into Australia.
Okay, we'll be looking out for all of that. Rohit, thank you. Rohit Chatterji, head of APAC and M&A at JPMorgan. Coming up, hear why a Japanese steelmaker sees India's industry overtaking China's in the long term. Our exclusive with JFE Steel is next. Keep it here with us. This is Bloomberg. Japan's JFE Steel says it expects India's steel industry could overtake China's in the long run. Executive Vice President Hiroyuki Ogawa spoke to us exclusively about their business outlook after announcing last month it was investing $1.7 billion in a joint venture with India's JSW Steel.
直近ですね、我々の中期計画というのを発表しました。
We've just announced our midterm plan. Along with the 3-year plan, we are drawing a vision for ourselves 10 years from now. In Japan's current situation, it is difficult to achieve major growth. Our basic strategy is to build resilient steelworks domestically, produce high value-added products there, and grow through profit. But with volume declining, even high-profit products barely offset the loss. With this in mind, it is highly significant for us to pursue an expansion strategy in a growing area in order to shape our future. Therefore, focusing on India this time and building steelworks there is extremely significant.
Okay, you talked about the Indian steel market, but let me ask about the overall industry in India. But what is your outlook on the India's steel market?
India's steel growth rate is said to be around 8%, so there is great room for us to enter and expand here. Previously, the Indian economy experienced major growth in areas different from typical economic growth, such as IT. But with a population of 1.4 billion, there is huge potential. With infrastructure expansion, steel has a very significant importance. This is why we are focusing on this market. The Indian government is aiming for a very large production volume of 300 million tons by 2030.
Do you think the India's steel market could eventually overtake China's and become the world's largest?
China currently has an enormous production capacity of around 1 billion tons. But since India's population has surpassed China's, if you look at the truly long-term future, I believe it is certain that India will become the world's #1 steel-producing country.
Other foreign steel producers are scaling up their investment in India. Do you JFE aim to position your company as the top international steel maker in India?
もちろん我々はですね、そのナンバーワン目指してます。で、
Of course, we are aiming to be #1. Our focus is that India's growth is extremely rapid. While competitors are naturally considering expansion in India, we believe there's ample room for mutual competition. Crucially, our strength lies in JSW's exceptional execution capability and high investment implementation rate. This is evident in our past expansion speed. They execute with a sense of urgency, accomplishing in 3 or 4 years what others take 4 or 5 years to achieve. On the other hand, we have a long history in Japan, having experienced high growth and then transitioned into high value-added production. By combining our experience with JSW's execution capability, we can build a competitive advantage and become the #1 steel manufacturer in India.
JFE's the current midterm business plan, the 8th one, allocates roughly 400 billion yen for overseas steel operations. Is India the only emerging market you are prioritizing, or are there any additional regions under consideration?
While we're not solely focused on India, when you mention emerging markets, India is undoubtedly the most important market for us right now. We're also interested in the US. One question is whether we can do something in the US. Then, looking beyond that, where exactly will the next growth area emerge after India? We're all looking at the world map and considering possibilities, but we don't have an answer yet.
So Chinese steel industry is ramping up its low-cost steel products export, including to the Indian market. How does this potentially affect your investment, and how much are you worried about this?
During periods of high economic growth, steel is extremely important and necessary. That's the logic behind China's capacity development. But when economic growth slows, something Japan has also experienced, the question arises, what to do with the surplus capacity once iron demand peaks? This structural shift is a major challenge for China. Trying to absorb it all through exports is nearly impossible. China is a massive country. It currently exports around 100 million tons, which is roughly equivalent to the combined crude steel production of Japan and South Korea. Therefore, Japan also faced various risks as a structural recession factor due to this surplus capacity. This is fundamentally a problem China itself must address, and I believe they will eventually tackle it.
That was JFE Steel Executive Vice President Hiroyuki Ogawa speaking with Bloomberg's Yusuke Makewa. Let's do a recap of Indian markets down for a second day, extending the bruising start to 2026 for Indian traders. The Sensex currently down about 0.1%. It's negative territory for the other benchmarks as well. And some say the sluggish earnings as well as geopolitics will add volatility for yet another year. We know the Nifty has been lagging North Asian counterparts. What's key really is that trade deal with the U.S. And we'll have more from the earnings season in India with Infosys, the latest of the nation's tech giants, to report results later today. Analysts expecting weak single-digit sales growth for another quarter. This comes after disappointing earnings from Tata Consultancy Services and HCL Tech earlier this week. Let's get more on what to expect from Infosys earnings later with Asia Equities reporter Ashutosh Joshi. Ashutosh, what's the report card likely to look like?
Hi, thanks for having me on the show. India's earnings season has started on a not so great note with two big companies, Tata Consultancy and HCL Technologies, reporting earnings that trailed consensus estimates. However, these two companies' commentary about growth starting to pick up, some improvement in demand environment, some of the clients considering spending more on technology services has prompted analysts to look ahead, and there is hope that Infosys, which reports later today, will follow the suit.
The thing is, some say Infosys is still struggling to get big contracts, and that's going to weigh on the company going forward.
Infosys has struggled indeed. This will be 11th straight quarter of a single-digit revenue growth for the company. The company's shares are trading at same level seen almost 4 years ago. In terms of market share also, it has struggled against its larger peer, Tata Consultancy. Expectations are in Infosys are that today's earnings will indicate how company is starting to use its AI capabilities. Indian companies benefit from AI multiple ways, but at the same time there are challenges. Tata Consultancy in its conference call clarified that how company is using its training programs to prepare its staff for AI knowledge. Something similar is expected from Infosys. Infosys is also expected to talk more about classifying its revenue that it earns from AI-related services. That will be something analysts will be watching for today's earnings.
We know that Infosys facing pricing pressure. Can its AI business at least provide that buffer?
It is hard to say at this point. Companies are looking to demonstrate their AI capabilities to clients. What we are noticing is that across the sector, the non-AI discretionary spending by clients is yet to show meaningful growth. At the same time, AI-related programs are finding some spending from clients. This means companies will have to prioritize their AI offerings. At the same time, companies will also have to use AI to lower their cost, their own cost. Indian companies such as Infosys and TCS, they have a huge workforce. In the past, we have seen some of these costs are dragging. TCS earnings highlighted that India's latest revision of labor rules led to one-time charge for the company and led to its trailing the earnings. So now that's the challenge for Indian companies, which way AI is going to benefit them. Firstly, to control their own costs, at the same time with bigger and better margin contracts.
Ashutosh Joshi, Asia Equities reporter, we thank you so much for your time as we await results from Infosys later today. Still to come, the latest on Iran, as President Trump tells its leaders to show humanity and promises protesters that help is coming. This is Bloomberg.
Retaliate in the instance of U.S. strikes against U.S. assets in the Middle East. What do you say to U.S. service members about why it's worth the risk to intervene in Iran?
Yeah, Iran said that the last time I blew them up with the nuclear capability, which they don't have any longer. So Iran said that the last time. They better behave. Yeah, the message is they've got to show humanity. They've got a big problem. And I hope they're not going to be killing people. And I'm going to have a report very soon. Ideally, you'd like to see it. But what we want to see is we don't want to see people killed. And we want to see a little bit of freedom for these people.
President Trump there warning Iranian leaders to show humanity as he and his team consider their next move. Trump earlier called on Iranians to continue their protests against the government, promising that help was on its way. But he did not specify exactly what that means. For more, let's bring in Horizon's Middle East and Africa anchor Jumana Basachi in Dubai. Jumana, what do we know? What is the U.S. considering?
Well, quite a strong truce social post that you were just showing there, Haslinda, with the President Trump saying that help is on the way, encouraging Iranian protesters to keep going, to take over the institutions, and also urging Americans to leave the country as well. He also said that they're waiting to see the final figures or the latest figures of exactly what the number of casualties is so far. It's very difficult to ascertain what is happening on the ground given the internet blackout. Latest human rights agencies have estimated that up to to 2,500 people have been killed. Again, it's not easy to verify this information. Others on the ground estimate that it could be as close to 10,000. I would just point out that if that is the case, more people have been killed in these demonstrations than in the 12-day war that took place between Iran and Israel last summer, something to bear in mind. But on the back of that, President Trump has said that if the Iranian regime continued to crack down with such violence, then they would be crossing a red line and they would have to act accordingly. So the question from here is, what exactly are the U.S.'s options? Yesterday, he talked about imposing a 25% tariff on any country still engaging with trade in Iran. That is obviously a non-military option, so sanctions are one possibility. They could also go down the non-kinetic path of helping to restore connectivity, internet connectivity, perhaps leaning on Starlink to help demonstrators on the ground. And then, of course, the kinetic option is the military option, something similar to what we got last summer, where they would go after key weapons depots, maybe military infrastructure, possibly even figures within the regime as well. We still don't know what the U.S. are planning, but at this point, it does seem clear, Haslinda, that the U.S. are planning on doing something, and they're formulating those plans as we speak. At the same time, in the region, yesterday, for example, we heard from the spokesperson for the Qatar Ministry of Foreign Affairs. They're warning that if the U.S. do get involved in Iran, it could be, quote, catastrophic for the region.
We know Trump said that the end game is a win. You got to wonder what the regime is looking at, how it perhaps plans to retaliate against the threats being made by the U.S.
Yeah, and what we've seen so far is extreme violence, rubber bullets. There are eyewitness reports of bodies piling up outside hospitals. And the numbers, as we say, cannot be verified. But most definitely, the number of people killed has been in the thousands. This is the biggest test to the Iranian regime since 1979. There have been several attempts of demonstrations, mass demonstrations. This one so far seems to be the most violent. And what you can say about the regime at this point is they're most definitely weakened after the war last year, after the losses that were inflicted on them after the Iran-Israel war and the U.S. strikes on those key nuclear facilities, and the loss of proxies around the region as well. You can't forget that with the fall of the Assad regime, with Hezbollah weakened, with Hamas obviously diminished as well. So they don't have this sprawling tentacle of proxies that they once had a couple of years ago. That being said, and what many analysts are still pointing out, is they still exercise a lot of central command over the security forces. And as long as the IRGC and the Revolutionary Guard and security forces continue to take orders from above, there's no risk of an internal coup, right, in which case these demonstrations might have to go on for a lot longer in order for there to be a serious existential threat to the regime. So that's something we're watching very closely.
Jumana, thank you. Horizon's Middle East and Africa anchor Jumana Basachi in Dubai for us. Now, Japanese Prime Minister Sanae Takaichi is pushing for closer economic and security ties with South Korea after hosting talks with President Lee Jae-myung. That's as she seeks to contain diplomatic and trade tensions with China. For more, let's bring in Japan politics and economics reporter Sakura Mukarami. Sakura, how does China factor into the Lee-Takaichi meeting?
So the China factor didn't really come up explicitly in the talks between President Lee and Prime Minister Takaichi, but it is a fundamental backdrop that's kind of informing their decision and their talks in general. So Takaichi has actually said that they had very in-depth discussions about supply chain cooperation. She didn't go into the details of what that cooperation may look like, but it seems very much that Japan is seeking more economic cooperation, more security cooperation as their relationship with China is on the rocks. That being said, on the other side, President Lee is being a bit more cautious about their approach. He basically said it's important for there to be a common ground and for there to find ways that the three countries, including China, could work together. So there is this tension there. There is this kind of three-way dynamic that's playing out between the two of them.
We know that last week Beijing announced a ban on the sale of more than 800 dual-use items to end users that could aid Japan's military capabilities. Where are tensions with China now?
So far, we're not seeing an exact effect of these trade tensions just yet. Just the other day, the Keidanren, Japan's biggest business lobby, said they're not seeing a direct impact, but the impact is probably likely to come around in the following months. That being said, there have been reports saying that Beijing is considering reviewing the kind of tightening the export license reviews for medium and heavy rare earth materials. And that could have a real impact on the Japanese economy, also Japanese businesses. Obviously, the auto industry is incredibly reliant on these materials. So there could be longer-term tensions that come up in the long term.
Of course, there's talk of a snap election in Japan. Could these broader tensions with China impact that decision in any way at all?
Yeah, it is definitely factoring into Takaichi's decision, probably, because Takaichi, she's enjoying personal popularity in the polls, but ultimately the LDP doesn't have a strong majority in either chamber of parliament, and this is something that weakens Takaichi's capability to push through policies both domestically and also project stronger power on the international stage as well. So being able to solidify and cement her power domestically is probably something that she wants to do as she kind of counters China or responds to China and the diplomatic spat that's playing out between Japan and China.
Sakura, great perspective there. Bloomberg Japan politics and economics reporter Sakura Murakami in Tokyo. Now let's get to Bloomberg opinion columnist Reidy. He says it makes sense for Japanese Prime Minister Sanae Takaichi to call a snap election next month as her polling numbers remain high. But to enact meaningful change, she needs to turn her popularity into a long-lasting administration of the kind overseen by her mentor, the late Shinzo Abe. Gearoid joins us now for more. Do you think she can translate that high ratings to actually votes? What are the challenges?
Yeah, I think that would be the most likely scenario at the moment. The reports indicate that Takaichi is looking to reclaim what the LDP had before the last election, which is they had, by themselves, without any coalition partners, a majority in the lower house. I think it's early days in the election campaign at the moment, or the campaign's not even underway or not even officially declared. But I think that would be the most likely scenario, that Takaichi will be able to use her popularity to get out the votes and to undo the damage that was done in the last election. But you have to remember that the reason that we're talking about having an election at all is that her predecessor Shigeru Ishiba, he also thought he could do the same thing. He was also seen as being popular with the public. He maybe jumped the gun a little bit when he called an election back in October 2024, and that backfired rather spectacularly. So it's certainly not without a risk. And if Takaichi does end up choosing the wrong side of this bet, she's going to have a very short-lived premiership as well. But I would say that is not the main scenario, not my main scenario, certainly.
So a win is not guaranteed. Her popular rating is about 78%. That's really, really high. Talk to us about who her base supporters are. The elderly in Japan or the younger population?
Quite the opposite, yeah. I should say Takaichi enjoys broad support among all age groups, but one thing that's particularly interesting about her is that her approval ratings among younger age groups is spectacularly high. Among the under 30s, I believe it's something like 92% in a poll that was taken last month. Now, these polls do have small sample sizes, and obviously when we're talking about the younger age groups, the sample size of respondents becomes even smaller again. But certainly she is enjoying incredible support among that age group. And you see this online. You see this, with people supporting her online as well. Older age groups a little bit more skeptical, but still very much broadly behind her, I would say.
Gearoid, thank you. Bloomberg opinion columnist Gearoid Reidy there. And we have breaking news out of China. China raising the margin financing deposit ratio to 100% from 80%. Again, China Securities Regulatory Commission has approved raising the ratio to 100% from 80% for the Shanghai, Shenzhen and Beijing bourses, and that's according to its own statement. Before we go, here's a look at our guests for tomorrow. We'll look at how geopolitical risks are shaping markets with Wealth Advisory's Indo-Swiss and Saif. Keep it here with us. This is Bloomberg.